For over a century, the pursuit of oil has sparked wars, forced unusual alliances, and ignited diplomatic disputes. Now, the world's two largest economies are vying for another valuable resource: semiconductors, the chips that power our daily lives. These tiny silicon wafers form the core of a $500 billion industry that is projected to double by 2030. Whoever controls the supply chain, the intricate network of chip manufacturing companies and nations, holds the key to becoming an unparalleled superpower. China aims to master chip manufacturing technology, which is why the United States is severing its ties with Beijing in the semiconductor realm. Today, microchips are the new oil, the scarce resource on which the modern world depends. Military, economic, and geopolitical powers are all built upon the foundation of computer chips. Almost everything from missiles to microwaves, from smartphones to stock markets runs on chips. Within the Tendata system, it is evident that chip trading activity has been highly frequent in the past 3 years, with a steady upward trend. Until recently, the United States has also designed and manufactured the fastest chips, maintaining its leading position as the foremost superpower. In the short term, the United States is gaining the upper hand, but its chip war against China is reshaping the global economy. Semiconductor manufacturing is complex, specialized, and highly integrated. The chips for iPhones are designed in the United States, manufactured in Taiwan, Japan, or South Korea, and then assembled in mainland China. India is increasing its investments in this industry and may play a larger role in the future. Semiconductors were invented in the United States, but over time, East Asia has gradually become the manufacturing hub, primarily due to government incentives, including subsidies. This race is about mass-producing the best and most efficient chips, and smaller is better. Even for top chip manufacturers, achieving this is not easy. In mid-2022, Samsung became the first company to start mass-producing 3nm chips. Later that year, the world's largest chip manufacturer and Apple's major supplier, TSMC, closely followed suit. How narrow are they? Much thinner than a strand of hair, about 50 to 100,000 nanometers. These smaller cutting-edge chips have more powerful functionalities, which means they can be used in more valuable devices such as supercomputers, artificial intelligence, and the Internet of Things. Throughout history, powerful nations have deployed advanced computing technology into their intelligence and military systems. How is the United States hindering China's progress? The Biden administration is actively seeking to prevent China from acquiring the technology to manufacture chips. In October of last year, Washington announced comprehensive export controls, making it nearly impossible for companies to sell chips, chip manufacturing equipment, and software containing U.S. technology to China, regardless of their location in the world. It also prohibits U.S. citizens and permanent residents from supporting chip development or production in certain Chinese factories. The U.S. is attempting to compete with China through significant investments in technology, dealing a heavy blow to China as it relies on hardware and talent imports to drive its emerging chip manufacturing industry. ASML, based in the Netherlands and the sole manufacturer of the most advanced lithography machines used in producing cutting-edge chips, is estimated to lose around a quarter of its past revenue generated from China. Micron, the largest memory chip maker in the U.S. and essential for supercomputers, military hardware, and any device equipped with processors, has announced plans to invest $100 billion over the next 20 years to construct a computer chip plant in northern New York State. Due to security concerns, the U.S. has prohibited the sale of Chinese technology, and the deadline for removing Huawei's 5G kits has been postponed. How has China responded to this? With its economy facing significant slowdown, withdrawing goods or services or implementing its own export controls may do more harm than good. Beijing has filed a complaint with the World Trade Organization, WTO, but a resolution could take several years. Meanwhile, experts suggest that China will double down on investments and support for the domestic chip manufacturing industry. What are the respective advantages of China and the United States in the chip industry? China has a vast market size, providing broad demand and development opportunities for the chip industry. This offers Chinese companies the chance to achieve economies of scale and market share in large-scale production. Additionally, China has accumulated rich experience and capabilities in chip manufacturing. With a strong manufacturing base, China possesses efficient production capacity and cost advantages. Its manufacturing industry has become one of the largest in the world. The Chinese government currently places high importance on the development of the chip industry and has implemented a series of policy measures to support and promote it. These policies include funding support, tax incentives, and market protection, encouraging investment in research and development, R&D, and innovation. China has nurtured a significant number of engineers and scientists in the field of technology, building a talent reservoir. Its education system and research institutions have produced many excellent professionals in the chip industry. The United States has world-leading technological innovation capabilities in the chip field. Many renowned chip design and manufacturing companies are headquartered in the U.S., possessing advanced R&D strength and technological advantages. Furthermore, the U.S. has a robust intellectual property protection system that safeguards the rights of innovators. This provides a higher level of protection for companies in terms of technology R&D and commercialization, fostering innovation and investment. The U.S. also has a developed capital market and investment environment, attracting a substantial amount of investment and financial support. This provides funding security and market opportunities for research, development, and innovation by companies. The U.S. is an important driver of innovation in the global technology field and has a high demand for high-end chips. The demand from the U.S. market plays a significant role in driving the development of the chip industry in areas such as high-performance computing, artificial intelligence, the Internet of Things, and cloud computing. What will be the future direction? Who will be the winner in the chip competition between China and the United States? In the short term, the United States still holds promising prospects in the chip industry and is expected to maintain a lead of at least 3 to 5 years. Does this mean that China will forever lag behind the United States? Not necessarily. Looking back at history, in the early 1990s, China was relatively behind in the field of the Internet. However, with the support of the Chinese government, China actively promoted the development and application of information technology. Through the introduction and absorption of foreign technology, China's Internet industry experienced rapid growth. Companies like Alibaba, Tencent, and Baidu became globally renowned Internet giants and made significant breakthroughs in areas such as e-commerce, social media, and search engines. Currently, China's chip industry is indeed facing challenges and constraints in its development, but history is always full of opportunities and challenges. The chip competition between China and the United States ultimately boils down to a competition of comprehensive national strength, and we can still anticipate unexpected surprises that China may bring. In the short term, the chip industry has to deal with the global economic slowdown caused by the Ukraine conflict, rising inflation, and the bumpy process of China's economic reopening. This has had a significant impact on the global economy. It will force players to choose sides and may cut off opportunities for many to enter the Chinese market. Currently, the advantage of the United States is declining, weakened by competitors from China's Taiwan, South Korea, Europe, and particularly China. Today, as the chip war unfolds, it is revealed that China's annual spending on chip imports exceeds the spending on oil imports, and China is investing billions of dollars in a chip manufacturing plan to catch up with the United States. The United States holds a dominant position in chip design and manufacturing and applies this technology to military systems. At the same time, China is also catching up rapidly, with ambitions in chip manufacturing aligned with its military modernization efforts. The United States has already decoupled critical components of the chip manufacturing process from the Chinese market, leading to a global chip shortage and igniting a new Cold War with a major rival superpower eager to narrow the gap. The chip war between China and the United States has already begun, and our conclusion is that the U.S. lead is only temporary, as there are still tremendous development prospects for China's chip industry. Let's wait and see. Feel free to share your thoughts in the comments section.